All right. All right. All right. We are live. What's up, everybody? Jimmy Vercellino here. Wanted to take some time and talk about VA loans and refinancing. So there's been a lot of talk, right? I'm getting a lot more phone calls from YouTube, consultations, veterans asking, hey, I'm receiving these things in the mail. Should I refinance? What are they saying? Where are rates at, right? So that's exactly what I want to cover today, is making sure that, excuse me, you guys understand really how the VA refinance process works, what it means for you as a veteran or active duty military, and whether or not it's something that you should take advantage of. Good to go, because with no, that's not a word. With interest rates reducing, I suspect that there's going to continue to be opportunities for veterans moving forward into Q4, right? And then Q1 and Q2 of 2026, that there's some money to be saved finally, right? This is something that we're excited about because we've been in an environment where interest rates have remained elevated. So if interest rates are coming down, what does that mean for veterans? It means that you can reduce your monthly payment, right? Reduce the amount of interest that you're paying to the bank every month, right? And so save money, right? Increase your household income, which of course is what we're all after. So if you haven't watched any of my videos before, my name is Jimmy Vercellino. I'm a mortgage loan originator. I specialize in VA loans, Marine Corps veteran. I help veterans all across the country with all of their VA home loan financing needs. And that's exactly what I want to talk about today, is VA loans and refinancing. So if you have questions, all right, drop a comment in the comment section, right? And I will do my best to get it answered for you. Roger that. All right, so let's go ahead and get started. There's two types of refinancing. The first one that I want to discuss is something called an IRRL, all right? An interest rate refinance reduction loan. Kind of a mouthful, right? In my industry, we refer to it as a streamlined refinance. And so this is designed to help veterans reduce their mortgage interest rate, right? Without all of the kind of the way I refer to it as heavy lifting that I did or that we had to do the first time that you purchased a home. So you remember how you had to provide W-2s, right? Bank statements, pay stubs, tax returns, firstborn child, blood type. Kidding about the last two, right? But it probably felt like that. So with the VA Streamline, or IRRL, you guys heard me say it earlier, I'll say it one more time, interest rate refinance reduction loan, you get to skip all of that, okay? That's the cool thing about this loan product, right? You're essentially recreating a new loan with a lower interest rate, VA loan interest rate. So the way it works is there's no appraisal required. VA doesn't require an appraisal on a IRRL, right? So not going to have to pay $600 for an appraisal. In addition to that, right, you don't have to provide any income documents, no tax returns, no pay stubs, no explanations for, your hourly wages and explaining income to an underwriter. You don't have to do any of that on this loan. And in addition to that, you don't need to provide any bank statements because there are no out-of-pocket expenses. Now, notice what I did not say. I didn't say that there are no expenses. I just said that there are no out-of-pocket expenses. And this is something that a lot of mortgage lenders will do. They'll kind of disguise it and they'll say, well, there's no out-of-pocket expenses. Doesn't mean that there's not any cost. It just means that the cost is being rolled into the loan. Roger that. So what are the costs associated with it? Well, it's the standard title, right? Title insurance, escrow. And then if the lender is charging you any origination type fees, those could also be included, but you're rolling those in to your loan. You following me along on that? So, or you have the option to pay them out of pocket if you want to, not increase your loan balance. That's up to you as the veteran. You have that option. So you're rolling these fees into your loan. You're also rolling in things like prepaid taxes, prepaid interest, and prepaid insurance into the loan. So right now, you most likely have a mortgage statement, right? You get that mortgage statement if you look on the section where it says escrow account. You guys know what I'm talking about, where it says escrow account. It shows a balance in there. So a lot of times my clients will ask me, they'll go, Jimmy, what happens to that money that I already have in my escrow account? The answer is it gets refunded back to you in the form of a check after you've closed. You tracking with me on that? So the lender is going to set up a new escrow account for you. So all of these costs are rolled into the new loan. You say, well, this is great, right? It all makes sense. Now, I just want to slow down for a second. By the way, if you're just joining, my name is Jimmy V, mortgage loan originator, specialized in VA loans, talking about VA loans and refinancing today. Right? There's a lot of questions coming in from my YouTube channel. Jimmy, talk to me about the EARL, right? Talk to me about a VA cash out refi. So that's what I want to cover today. And if you guys feel like I've earned it or earn it eventually, consider showing your love, clicking like on the video so that way we can educate more people. All right. So back to this EARL, right? When does it make sense to refinance? Right? Well, just because you get something in the mail that says that you're eligible, that looks like it's official from the VA, doesn't mean that you should do it, right? Because what I've learned or what I've experienced is these guys are really, what's the word I'm looking for? It starts with a D, deceitful, right? There's just a lot of manipulation that looks like there's documentation coming from the VA when in fact it's really not. I've even had guys call my clients and say, yeah, this is Jimmy V. I helped you out with your loan last time. It's time to refinance again. They're like, whoa. That's not the Jimmy V that I know, right? So you just have to be careful. And the point that I'm trying to share here is that oftentimes on these solicitations that look like they're coming from the Department of Veterans Affairs, they're really not. They're coming from a refinance, like what I refer to as a refi sweatshop online that is showing you the absolute lowest rate possible, right? And they're not disclosing to you the costs associated with locking in that rate. So for example, if you flip over that documentation and you read the fine print, you can see that they're charging you a boatload of dough to do that refi. All right. So you just have to be A, careful, and B, you have to make a informed decision on whether or not the juice, right? The juice being the monthly savings is worth the squeeze, right? So how much is it going to cost me, right? And how much am I going to save? And does that make sense? And that's what you have to figure out. You tracking with me? So there's a couple of different reports that come out. One is called the CPI report. Another is called the PCE report. These are reports that gauge inflation. Now, if you've watched any of my videos before, you've probably heard me talk about these where I say, look, if you want to keep your finger on the pulse of what's happening in the economy, right? Follow these reports. The CPI report is basically an inflationary report that the government puts out that measures a basket of goods and services and tracks how inflation is responding to those items. Okay. The PCE report, this is the Fed's favorite measure of inflation. Now, a lot of lenders will try and confuse and try and make it sound like, following interest rates is something that we have a monopoly on and that you can't do, right? No, that's nonsense. You can do it yourself too. Follow these reports. Listen to what I'm telling you, and you can follow interest rates from the comfort of your own chair at home. Okay. So the second is the PCE report. This is the Fed's favorite measure of inflation. Okay. It measures basically how Americans are spending their money. It's kind of like a giant receipt for the economy and what they're spending it on, right? And how much it costs. The Fed's target rate for inflation is 2%. So as inflation goes lower, interest rates will also go lower. Another easy way to track how mortgage interest rates are behaving is the 10-year treasury. So all you have to do is go to Google, you guys, type in 10-year treasury, right? Look at how it's responding. Typically, if it's going lower, that means interest rates are going lower. It doesn't mean that that's the interest rate. It just means that you can kind of get your finger on the pulse of what's happening with mortgage rates across the economy. All right, guys, listen, if you have questions, make sure to type it in the chat box. I don't want to just talk about what I think you want to know all night, right? I want to talk about what you have questions on. If you feel like I'm doing a good job and I've earned it so far, you're also consider showing your love, clicking like on the video too, so that way we can promote this video to more vets, all right? So back to kind of whether or not it makes sense. Here's what I typically tell my veterans. You want to shoot for at least 1%. Now, this isn't a one size fits all. In other words, you want to try and shoot for a 1% reduction in rate. So if you're at 7%, ideally, we want to get you 6% or better. If you're at 6.5%, ideally, we want to get you 5.5% or better. Okay. But that is not the end all be all. It's just a good gauge. So if you're watching this video, you're curious to know if you should refinance, my suggestion would be first question to ask, can I reduce my interest rate by 1%? Okay. And if you can't, doesn't mean that it makes sense, or even if you can, it doesn't mean that it makes sense to refi, if I'm being 100 with you guys. Okay. But that's one gauge. The second gauge is pretty simple, right? What's my loan balance and how much am I going to save? Now, the reason why the loan balance plays into it is because the bigger the loan balance, the more the savings is going to be. So if a veteran came to me and said, hey, Jimmy, I've got a $175,000 loan, I can reduce my interest rate by 1%. Does it make sense? I might say, yeah, that's tough, man. I don't think the juice is going to be worth the squeeze, right? You might save $50 a month. It might cost you $3,000. Oh, don't do it, dude. Right? Talk myself out of a job, but don't do it. Now, if a veteran came to me and they had a $700,000 loan and they were decreasing their interest rate by 3/4 of a percentage point, could make sense, right? That bigger loan balance goes further. What's up, Sarge? Sarge asks, thank you so much, Jimmy. I'm hoping to refinance next year. I renovate my home now and I am in deep debt. The problem is I don't have any money for closing. Do you have any recommendations? Yes, I do. And Sarge, you're already on it, brother. You're asking all the right questions. So one idea may be a refinance or a cash out refi. So I'm talking about VA IRRRLs right now, but we can certainly talk about VA cash out refinances to see if that makes sense for sure. So let me kind of land this plane, so to speak. All right. And then I'll move into to the cash out refinances. Good to go. All right. So, back to the conversation about the IRRRL, right? Here's the main question that we have to ask ourselves as veterans to determine whether or not it makes sense to refi. You guys keep hearing me say this, but it's true. It's like, is the juice worth the squeeze? The juice, the savings, the squeeze, the costs. Okay. Now, this framework that I'm about to give you is going to be a framework that you will use for the rest of your life. I'm not kidding, like the rest of your life when determining whether or not it makes sense to refi. I don't get to say that. You do. No mortgage lender gets to say whether or not it makes sense for you to refinance. It's a decision that the veteran or the homeowner needs to make themselves. So here's how it works, okay? Let's say that the total costs associated with the loan is, I don't know, $3,000, okay? So I'm going to type in my calculator here, 3,000. You guys with me so far? So let's say that the monthly savings, okay, is $100 a month. Okay, so it's going to cost me $3,000. I'm going to roll this into my loan to do this refi. You guys with me so far? Type it in the chat box if you're following me along on this, and if I need to kind of hone in or refine this. But if it costs you $3,000, okay, divide it by the monthly savings. So in this case, we're estimating $100 a month. Okay, that turns out to be, I put 1,000. Okay, whoops, hold on. Come on, Jimmy V. Math for Marines here. 3,000 divided by 100. That's 30 months. There we go. I didn't need a calculator to do that. All right, I promise. But I'm trying to illustrate this point on here. Okay, 3,000 divided by 30. Okay, come on, Jimmy V. 3,000 divided by 100 is 30 months. Divide that by 12, right? That means that the break even is 2.5 years. So here's what I'm trying to say, okay? If you are not going to live in that home or have that mortgage for greater than 2.5 years, it does not make sense to refinance. Okay? It doesn't make sense. You say, well, why not? Because you're not going to live or own the mortgage long enough to justify the $3,000 that you're rolling into it, right? Because the first 2.5 years of you doing this refinance is basically covering the $3,000 that you rolled into the loan by $100 a month, right? Yes, you are increasing your monthly cash flow. However, you still got to pay that stuff back. And if you're looking at it from an investment standpoint, that's the right way to do it. So it's a 2.5 year break even. So all you do is you take the cost, right? In this case, it was $3,000, right? You divide it by the monthly savings, 100, right? So that equates to 30 months. 30 months divided by 12 equals a 2.5-year break even. And that's how you decide whether or not a VA IRRRL makes sense for you. So what we do for our clients is we just have them send us a copy of their mortgage statement, right? We put it together. We look at an estimated credit. We don't even pull credit, right? We just look at an estimated credit score that they tell us, here's where my credit score is trending. And then we put together the hypothetical numbers. So if that's something that you want me to look at for you, I'd be happy to do so. Just shoot me a copy of your most recent mortgage statement. If you'd like more information about VA home loans, you're welcome to check out my YouTube channel. I've got a lot of videos on here about VA home loans, really any topic that you can think of. I try to really, I should say any topic related to VA loans that you can think of. I try and provide as much value as I possibly can. I also uploaded a new video. I believe it was on Thursday night, how to have multiple VA loans at the same time. This continues to be one of the #1 topics that a lot of veterans are asking questions about on my channel. It's like, I want to build a real estate portfolio. I want to build generational wealth. It's like, how do I do that? Watch that video. All right. So what questions do you guys have for me? All right. Sarge, I'm going to move into the VA cash out here in just a second. I hope that helps you guys to better understand the VA IRRRL, because I think that there remains a lot of confusion. Remember, it's the mortgage lender lending you the money. It's not VA, right? So that's something that you have to keep in mind when you're going through all of this. All right. Let's see here. So, Sarge, the cash out refinance, VA cash out refinance. Okay. This is something that it's a pretty big deal, because there are no other loan products that exist like this in the marketplace, where you can literally go up to 100% of the home's appraised value and pull that money back out with no private mortgage insurance on a 30-year fixed, right? So this is a big deal. And so why do veterans want to do this? Joe Burke asks, are there any cash out refinances with a 93 LTV? The VA would be one. So you can go up to 100% LTV on a VA loan. Now, here's the part, however, right? You guys are expecting me to keep it 100 with you. I'm not going to get you super excited about a product, talk about all of the pros, right? But we also have to talk about the cons. Got to be fair, right? Got to talk about the cons as well. So about, I don't know, 4 years ago, Ginnie Mae, which is basically the purchaser of government-backed mortgage securities or government mortgage-backed securities, they kind of levied a tax, if you will, on VA cash out refinances. So anything above a 90% LTV, that means if you're borrowing more than 90% of the home's appraised value, VA is gonna charge you more dough to get that done. And they charge basically that through the interest rate, right? Or the cost of borrowing those monies. So it's best case, in my opinion, if the veteran can keep their LTV at or below 90%, if you can. Doesn't mean that you have to, it just means if you can. So the VA cash out refi allows you to go up to 90 or even 100% of the home's appraised value. Okay. So Joe asks the questions, what are the lender's requirements? Well, lenders are going to have minimum credit score requirements. They can vary, Joe, between 580, 600, or 620. My general rule of thumb that I share with my veterans is you want to have at least 620, or I should say shoot for a 620. I can go as low as 580, but it doesn't mean that you're going to get a VA loan. Okay. Because you still have to go through the underwriting process, right? And if you're a habitual credit abuser, right, chances are the VA underwriter is not going to approve that loan. All right. So VA cash out refi, right? Why does a veteran typically consider this? Well, maybe they want to do a remodel on their house, right? Maybe they want to pay off high interest rate credit card debt. Maybe they want to send their kid to school, college, right? My daughter is talking about going to the university, right? So as her dad, I get to check out college campuses with her across the country, which is pretty exciting and pretty fun. I'm looking forward to that. But yeah, there's all sorts of reasons why veterans would consider refinancing. Kind of the two most common that I see is a debt consolidation or a home remodel. right? So over the last few years, Americans have not been able to keep up with inflation, and wage growth hasn't, you know, increased at the rate that we would have hoped it would. So as a result, many of Americans have turned to credit cards, right? They're living off credit cards and going into more debt. And so the question becomes, well, gosh, I don't know how long this is sustainable for, right? Do we sell our house? That could be an option. If you want to keep the house, would it make more sense to refinance, right? Pull cash out and consolidate all of those debts. So I'm going to give you an example of how it works. Okay. Let's say that a veteran has about $20,000 in debt. Okay, $20,000 in various revolving debt, credit card debt. Now, you guys probably have seen this before, where credit card debt can range. I don't know. You guys type it in the chat box. Tell me what you've seen. I've seen 15, 17, 20, sometimes even 24% on credit cards, right? And veterans are paying the minimum monthly balance or payment on it, and the flipping balance is still going up every month. That's not cool, right? Like, we're not down with that. We don't like that. We obviously wish we were never in that situation, right? But one idea or strategy to consider would be a VA cash out refinance, right? So if you think about it, you know, if you're able to pull out 20 or 40 or however much you want, right? Pull that money out and consolidate that high interest rate credit card debt into one 30-year fixed rate mortgage, meaning it's amortized over 30 years, and the rate would obviously be lower than the rate at which you were borrowing on the credit cards. Now, what that does is yes, you're taking that debt on the credit cards and you're wrapping it into your mortgage loan, right? And your loan balance is increasing. But what happens is your monthly cash flow is also increasing because you're eliminating the debts, right? You no longer have these debts that you're paying out of your pocket every month. Now they're being wrapped into the mortgage, okay? And by doing so, this is my son here calling me from a tennis tournament. I'm going to tell him to call his mom really quick. Sorry, guys. I haven't got to talk to him all weekend. He's playing in a tennis tournament in Tucson. So I'm really proud of him. Proud to be his dad, man. It's freaking cool. So anyways, so loan balance is increasing, right? But what you have to remember is let's say that the new interest rate is a hypothetical rate of 5.875. It doesn't mean that that's what your rate will be, but I'm seeing some VA rates trading in or around that range. A lot goes into that. Obviously, credit score, day of lock, all that stuff. That's my lender hat going on, right? Here's a disclaimer. But if you consolidate that high interest rate credit card debt into one 30-year fixed rate at 5.875, amortized over 30 years, right? Now what happens is that monthly cash flow increases because you don't have those monthly payments over here. They've been wrapped into that loan, right? And you're no longer paying them. And so what happens is you're essentially saving money when I say your monthly cash flow increases because you're no longer paying them. Does that make sense what I'm saying, you guys? So that's the neat part about a VA cash out refi that you're able to do is you're able to eliminate high interest rate credit card debt. Now, the thing that you have to remember about this loan, right? This is a full income and credit qualifying loan. You with me on that? So you have to provide tax returns, bank statements, pay stubs, etc., the whole 9 yards, right? You're not going to get away with doing it like a VA IRRRL. Well, I don't have to provide any pay stubs, tax returns, bank statements, etc. That's not the way it's going to work. Sarge says, thanks, Jimmy. From your experience, can the closing cost of VA funding fee be rolled in as a part of the VA cash out refinance? Yes, absolutely. That can be done. Good question. So essentially 9 times out of 10, 10 times out of 10, veterans elect to roll the costs in conjunction with the loan into the new mortgage. Now, Sarge, here's the one thing that I will say that I've talked hundreds of veterans out of doing a VA cash out refi before. Okay, because think about it like this, right? I'm all about helping you guys. I'm all about the VA loan, right? But I'm never going to recommend a VA loan that I wouldn't do myself. Okay. And here's the part that pisses me off with a lot of people. And I apologize for my brash language there, but it does. It pisses me off because I've seen commercials on TV and people have brought to me loan disclosures or loan estimates where they're charging veterans, in my opinion, excessively. Okay. And so let me put it to you like this. If you said, I want to pull $100 out of an ATM, and I told you that you would have to pay a $33 ATM fee, would you look at me and say, dude, you're dumb? I'm not doing that. Okay, you pull $100 out of an ATM, you're going to pay a $33 ATM fee to use that, to get that $100. Would you tell me that I'm an idiot? Like, no, Jimmy, I'm not going to do that. Well, that's the same way that I feel about a VA cash out refinance. Okay, if a veteran is paying a 3.3% VA funding fee, okay, and they're pulling $100,000 out of their home. So let's just say the loan balance was, I don't know, 300,000. Okay, $300,000. Okay, 3.3% times. That means that you'd have to pay $9,900 just to get that 100K out. You'd be like, no, dude, that's stupid. I'm not going to pay $10,000 to pull $100,000 out of my house, right? And so my point in sharing that with you is that's the part that you have to be careful about on a VA cash out refi. Okay. Now, how do you get around that? That's the more important question. You're like, dude, I like the idea of a VA cash out refi, but how do I get around that? Well, it's very simple. If you've got a VA service connected disability rating of 10%, you're able to get your VA funding fee waived. You tracking with me on that? You're able to get your VA funding fee waived. So just keep that in mind moving forward into the future. Questions? What questions do you guys have for me? Okay. I'm talking about VA loan refinancing. You know, we're seeing more of it. I'm getting more veterans watching my videos on the VA IRRL, the interest rate refinance reduction loan. That's such a mouthful. But more veterans are asking questions about this stuff. So I want to make sure that they get the answers, right? And at the same time, give you the pros and the cons of refinancing. I'm not here to talk veterans into using their VA loan if it's not necessary, right? But you just have to have a true consultant, right, help you make that decision. And if that's something that me and my team can do, I'd be honored to assist you, okay? It's my website, VALoansForVets.com, come on, Jimmy B, VALoansForVets.com, okay? You're welcome to check out my site. Schedule a time to speak with me if you'd like on your VA home loan. I kind of like doing these Sunday night live sessions. I don't know, kind of fun. Gets me kind of fired up for work the next week. Sarge says, so Jimmy, are you saying it's sometimes better to do a home equity loan HELOC instead of a VA cash out refinance? Yes, I am saying that. It very well can be. Yeah, you know, home equity lines of credit can be cheaper. Now, this only applies if you've got like a super low, sexy 30-year fixed rate mortgage. Like I wouldn't give up my rate, right, to do a cash out refinance if I didn't have to, right? So yes, I am saying that, Sarge. That's something that you should consider. And if I can help you with that, let me know. All right. I'll also put in my email address here for you guys. Veterans from this channel always trip out when they call me, they go, Jimmy, is this really you? Wait, you're the guy on the videos that I'm talking to. Veterans trip out because they can pick up the phone and call me on this and get a hold of me, right? So I'm not too big for you guys. I'm not going to big time you. You don't need to worry about that. I just uploaded a video on YouTube, by the way, how to have more or multiple VA loans at the same time. Kind of proud of it, if I'm being 100, all right? I put a lot of time, energy, and effort into it, the editing. So you guys check it out. Let me know what you think, right? If you have questions on multiple VA loans at the same time, that's the video you want to watch. Why would a veteran want to know that? Well, maybe you want to build a real estate portfolio, right? Maybe you want to build generational wealth, right? These are the types of things that can be done with the VA home loan benefit that not a lot of people take the time to discuss or explain to veterans or active duty military. Roger that. So if you're just joining me, my name's Jimmy V. I specialize in VA loans. I've closed over 2,000 VA loans, and today I'm sharing with you some pros and cons about refinancing, whether or not it makes sense, the different types of VA refinancing, how it works, right? What you should expect, what you'll need to bring. And of course, I want to answer your questions as well, you guys. All right. So if you have questions on anything that I've covered so far, thus far, just let me know. All right. That's what I'm here for, to be a resource for you. So Sarge, you're asking all the questions. Joe Burke, you're asking a lot of questions too. Who else has questions? All right. What do you guys got for me? Don't make me talk about what I think you may want to know. I want to talk about what questions you have. Maybe you don't have any. And if so, that's okay too. So like I said, I've talked about cash out. I've talked about the VA IRRRL. I've talked about those solicitations that you get in the mail, right? And whether or not, I would always encourage you to exercise extreme caution when getting those things in the mail, because they are, I've always said that they're wolves in sheep's clothing, man. You know, anybody that needs to disguise themselves when emailing or contacting a veteran, that's not cool, man. You know, not cool. So if I can look over anything for you guys, I'm happy to do so. It doesn't cost you any money. I'll tell you whether or not I think you're getting a good deal. And if I can beat it, I'll let you know that too. And if I can, I'll say, yeah, dude, roger that, man. Knock it out. You're good to go. All right. So if there's no other questions, I think I'm going to keep this one brief today. All right. VA doesn't teach this stuff, right? And that's exactly why I'm here, to provide valuable content and education for veterans and active duty military when it comes to utilizing their VA home loan benefit. If you haven't already, if you're watching, consider subscribing to the channel if you want to learn more about VA home loan benefits. If you feel like I've earned it, show your love, click like on the video. Helps the video to get promoted to more veterans and active duty military that are asking those questions. Does it make sense to buy a house? All right. Sarge says, Jimmy, is it the credit score that could be an issue? It's easier to do a cash out refinance compared to the other products. Yeah, that could be the case, Sarge. So if you, if your credit score is less than perfect, you may not be able to do a home equity line of credit. Right now, a home equity line of credit, it's not without its flaws either, right? You know, it revolves off of the Fed funds rate. But, to be fair, Fed funds rate is in a cooling or kind of a phase where all indicators suggest that it's going lower, right? So home equity lines of credit, the rates on those should also be going lower. But generally speaking, you want to have a minimum credit score on a VA loan of 620. Probably with a home equity line, you need to do your homework on this, Sarge. But home equity line, you'd probably be at or around 680 to 700. I don't do home equity lines of credit. I just refer them out to individuals because, they're just not my area of expertise. So let me ask you guys a question. I want to hear from you. This is kind of that fourth quarter in the year. I'm genuinely wanting to hear from you guys on this. Okay. So please, your feedback would be incredibly valuable to me. So whether you're watching the video live with me or later on, I'd love to hear your feedback. What type of content could I bring you that would provide the most amount of value? Can you think on that and let me know, or type it in the chat box if you can think of something off the top of your head? What type of content can I provide you specifically related to the VA loan that would provide you with the most amount of value? If you can let me know that, that'll help me to deliver you the most curated, custom tailored content specifically related to VA loans to your individual needs, right? I don't want to always talk about what I think you want to know. I want to talk about what you want to know. Raiders got beat 31-0 today. I'm a Raiders fan. Yeah, man. Yeah, Pete Carroll has not started off in the direction that we hoped. Sarge says, I watched a few of your interviews with others, and those were good. All right, cool. So you kind of like that interview format. I've interviewed a VA appraiser. I've also interviewed a VA underwriter. Her name was Fong, also prior service Marine. She's a badass, man. Love Fong. So yeah, that's good to go. So maybe more interview type style formats. That's good to go. I'll take that feedback. If anybody has any specific type of content that they want to see, let me know what that is. All right. So government shutdown. You may have watched my other video about what happens to VA loans during a government shutdown. The answer might surprise you. Not much. All right. And the reason why is because the VA does not lend the money. All they do is guarantee the loan by 25%. It's the lender lending you, the veteran, the money. Tracking with me on that? So the VA has relatively little to no involvement on the loan, and that's my point, right? When we say VA loans as lenders, really what we're saying is VA guaranteed loan, because that's all VA does is guarantee the loan by 25% in the event of default. So that's the part that you need to keep in mind. That's the part that you need to be just prepared for. I don't think that the government shutdown is really going to impact us a whole lot, or at least I haven't seen it affect VA loans. A lot of stuff is done automated, certificate of eligibility. Right now, the DD-214, if you don't have your DD-214, I would say this: make sure, right, that you have a copy of it in advance and upfront before you go under contract, because archives.gov has been furloughed. They've been furloughed. So be on the lookout for that. If you need a copy of your DD-214, you don't want to wait till you get under contract to request that. You want to get that now and upfront. If you can't find it, it's like, dude, find it. All right. Go dig through those boxes to get your DD-214. Roger that. So I want to hear from you guys. Where are you sounding off from? Where are you located? What states? I'm seeing a lot of veterans that are chiming in from North Carolina lately. So that's always cool. Obviously, Texas is always here representing. We've got Georgia in the house oftentimes as well. Where are you guys watching from this evening? I'd love to hear from you. Sound off with what state you're in. So remember, guys, interest rates change on a daily basis depending upon what's going on in the economy. Roger that. So Connecticut. All right. That's outstanding. I don't typically see too many veterans chiming in from Connecticut. So shout out to you, Sarge. Appreciate you. But yeah, so interest rates change or trade on a daily basis depending upon what's going on in the economy, right? So it's just like the stock market, right? They go up, they go down. Now, collectively, and I'm thinking about doing a video on this, like bad news, why bad news for the economy is good news for mortgage rates, because there's some conflict there, right? Generally speaking, bad news for the economy is good news for rates, because bad news for the economy means subsiding inflation. Whereas when you see like a really strong day in the stock market, because maybe job growth is increasing and these types of things, what happens is stock market rallies. When money comes out of mortgage-backed securities into the stock market, that creates mortgage interest rates to go up, because that's also inflationary pressure. So these are all things to keep in mind. Rates trade or change on a daily basis depending upon what's going on in the economy. So I feel like I'm rambling a little bit now. The guy is talking about mortgages, kind of geeking out on macro economic news and whatnot. So anyways, take it with a grain of salt, guys. But that's all I've got for you this evening. I'm going to check out here. I think I'm going to go watch some football. But if you guys have follow-up questions, all right, make sure you just email me, man. Go to my website, VALoans4Vets.com. Schedule a time to speak with me. You can do that there. You can also email me, Jimmy@VALoans4Vets.com. I always have fun doing these, all right? I don't know. I just like hanging out with other veterans, right? Talking through some questions that they may have. So if you do have follow-up questions, I'm not hard to find. Hey, appreciate each and every single one of you that are watching this video. Like I said earlier, if you feel like I've earned it, consider showing your love. Clicking like on the video helps to promote the video to more veterans who get educated on VA loans. Roger that. So, hey, appreciate you guys. Unless I don't have any other questions. All right. 5, 4, 3, 2, 1. Have a great night, everybody.